Well, it's a good time then to get in Nimesh to tell us what he's picking up on D Street chatter. Well, Nimesh, any bulls left or it's mostly bears?
Well, it looks like it's mostly the bears. Actually, it's more of a macro sell-off. The way the rupee is at, dollar is at 110, rupee above 86, crude rate back to 81. That's having a big impact on the broader market stocks, and that's impacting the sentiment as well. Look what's happening to the broader markets. Last week, the index fell almost 6-7%, and again today, the mid-cap index is down 3%. So 10% shaved off in a week, and the individual stocks are down 20, 30, 40%. So that's the kind of hit we've seen in the portfolio stocks for many investors, and that's having an impact as well. Sentiment also, there's a bit of impact now. From a domestic flow point of view, Nigel, the feedback is, while they have been nibbling into the broader market stocks, the mid and small cap, but it's very slow and very nimble. So they're not in a rush to buy because they are also aware that you can see further sell-off and you might get 4%, 5%, 10% lower. So there is buying in the broader market from DRs, but it's very, very slow. From an FI flow perspective, well, they've been sellers in the market. It's not that large, which is showing up in the broader market. So it's more like on the Nifty there is selling, but that's matched by the domestic buying as well. I guess might be close to the bit of a bounce back in the Nifty. I'm not too sure about the broader markets because all the stocks have rallied so hard in the last few years that maybe there could be more pain, and there is so much of retail and institutional participation which is still there in the broader market stocks. So that's the overall feedback. I guess we've broken the crucial support of 22,300 on the Nifty. I've been saying this, that's a very important level to watch. Now the next level to watch is 22,800 to 29,900 level. So that's the next technical level which a lot of analysts are talking about. But broadly, I guess the pain seems to be much, much higher in the broader markets, and that's largely because the non-institutional investors are now throwing in the towel.
All right, Nimesh, I'll be waiting by in the next few days to hear out when you say that now those non-institutional, market players, they're feeling a little bit better because there is clearly pain just looking on the screen out there. But individual stocks,
while markets are down, there are a lot of individual outperformers as well in today's market. As Nigel also pointed out, a few names. The first stock on my list today is Axis Bank. Within the financials, this is one stock which has relatively outperformed the private banking peers. Why so? Because one, there is buying from larger institutions, and B, there was an interesting Morgan Stanley note today morning, and they put out a tactical buy as well on Axis Bank at current level. So that's the first name. The second stock is CAMS. It's a fresh addition to the F&O list. That stock is under pressure for the last couple of days. So is today as well. The Dow is down 4%. There is selling. It's not a very large liquid stock, but there is selling pressure, and hence you're seeing that stock underperforming. So expect high delivery volumes in that particular name today. The third stock is Minda Corp. Within the broader market names, this is one stock which has not fallen very hard and has been in that very narrow range. But again, for Minda Corp, the indication is that maybe the company is very close to an inorganic move. So that's a trigger there. And the last is Nextgen. Again, mid-caps company, but hasn't fallen much. It's been in a very narrow range in the last couple of weeks. And now I understand the company is very close to raising funds via QIP. So that's something to watch as far as Nextgen is concerned.
Thank you very much for that. Slip into a break. On the other side, we'll get chatting with Jigar Mistry from Buoyant Capital. Stay tuned.